three huge pitfalls that you absolutely want to avoid if you're going through the process of creating a high cash value accumulation policy for any number of goals, including infinite banking. This is so important, and I'm going to walk through each one of these in this short video, and I'm going to tell you exactly why these are major aspects of this process that you're going through, and you want to make sure you don't fall into any of these. But first, to illustrate the point, I'm going to talk about a client that years ago came into my Trust and Estates office, and he was a very nice guy and had a very ample estate. He'd sold a business, high net worth, and he needed planning, and he'd approached another attorney and had a terrible experience from a trust standpoint, from a communication standpoint, in terms of spending a lot of money and not seeing a lot of value. And so I actually needed to walk through a little bit of rehabilitation to earn his trust, and that was a prerequisite to then setting up solutions that were going to accomplish what he wanted and needed to accomplish with his estate. That was something that I had always been committed to. It's why I started the practice in the first place, and I took that commitment to our team in 2018 when we established Insurance and Estates. We wanted to do the same thing, have a client-centric approach to setting up and designing solutions to meet client goals. This is key. It's a core value for us. With that in mind, you don't want to end up with the wrong person. So who's the wrong person? It's somebody that's not experienced in this kind of thing. It's somebody that may not be fully committed to putting the client's goals before their own. In our industry and in this particular effort that you're going through, the right person is going to have the experience to be able to understand exactly how to design a policy for cash value accumulation. And I'm going to just, pump up our team. We've got pro client guides with a combined total of over 70 years experience. More important, this is their commitment. This is what they do. They design these high cash value policies for this specific purpose. And this is not a commission-driven commitment. We've talked a lot about how the fact is that if you put more cash, PUA, into a policy, you're going to have a lower commission from that process because you just simply get a lower commission on PUA versus base. So this is a commitment for the benefit of clients, and you want to find someone with that commitment. All right, and if you end up with the wrong person, you're going to end up most likely with the wrong design, barring some kind of accident. But you need the right design, and that design is going to vary based on your goals. So you want, say, early cash value or the ability to take policy loans in early years. You're going to want a design that's very efficient in terms of a lot of PUA, a lower base, a term blend, these kinds of things that are central to creating the right design for the right strategy. If you're going to add lump sums, for example, if you're a high net worth person that wants to shelter and protect your capital in one of these policies, then you're going to want a design that supports those lump sums, that's going to be effective and flexible to allow for that. Product. The other piece of this is product. If you are trying to do something, say you want policy loan availability in the early years, infinite banking, you're not going to want to be talking to an IUL zealot that all they want to do is sell you an IUL. Fact of the matter is that product does not harmonize with that goal. We have an IUL expert here, and we also have whole life experts, and so that's where we can send someone one place or the other. If the goals do align with an IUL, they can go that direction, and so on and so forth. So you want to avoid the wrong design, and you also want the right product. You want to avoid the wrong product. Finally, you want to know that you've got the best company. You can have an infinite banking person that is all about a particular company. Maybe they just have a long history with this company. Maybe they got the best deal from this company. So you want to make sure that you have somebody that's vetting companies, which we do on an annual basis. We look at the top performing companies. We've had companies drop off. We've brought in new companies that are demonstrating leadership in the kinds of high cash value strategies that our clients want to pursue. So vetting companies are huge. All of this matters so much because you're trying to level up and accomplish certain goals, such as guaranteed growth, tax advantage, tax-free growth, tax-free retirement income, college funding. liquidity, obtaining the velocity of money and recapturing your money for money momentum, living benefits, and of course, legacy creation. As you're driving toward these goals, I encourage you, avoid these pitfalls. This matters to me. I hope it matters to you. Thanks for watching. God bless. I'll see you in the next one.